Welcome back to the channel. Thank you for tuning in. So guys, in today's video, I want to show you how to trade the ICT Weekly Market Profiles. Um, so what market profiles are is basically, think of them like cards. So it's like a bunch of cards that the market makers will choose to play for the week. I don't know if you understand. So it's like there's different cards that they use, and one of them is that we have a typical Tuesday low of the week, right? Where the market will form the low of the week on a Tuesday. If it does not form the low of the week on Tuesday, meaning if it does not form the low of the week on Monday, Tuesday, then we know that the low of the week will be formed on Wednesday. So going into Wednesday, in the New York, from the London session to the New York session, we can expect the low of the week to be formed, right? So those are like a bunch of, among others, different cards that the market makers will choose to play. So I'm gonna show you this concept through the scope of DXY. So DXY is not a tradable instrument, but we use it to get an idea of what's happening in the market. So whatever you see on DXY should be the exact opposite on Euro USD. So whatever we see here should be the opposite of Euro USD. Okay, so going into my charts, I'll be looking through the scope of a 30 minutes, and as you can see, I've basically marked the weekly candle. So this is how the weekly candle will be formed. So you can see this is Monday's trading, Tuesday, Wednesday, today Thursday, and then tomorrow Friday. So because of the advantage of smart money concepts, we know how most likely the weekly candle will form. We know that it will open on Monday, so we can use the opening price on Monday at 12. So the opening price on Monday at 12, it opened, rallied lower, and now I think it's trading above the opening price. Yeah, right now it's trading above the opening price, as you can see, by a small margin though. I'm gonna mark this as Monday opening price. So guys, this is actually a one shot, one kill video. So I don't know if you've heard of one shot, one kill, but it just literally came to my mind right now that I'm about to teach you one shot, one kill. So anyway, we see the opening price there on Monday. We mark that throughout the whole week. As you can see, it's being respected throughout the week. So we opened here on Monday. We can see we're finding, when we below it, we're finding resistance above the opening price. Only the bodies are staying below the opening price. So that's an indication of something, that something's going on. We have a low here formed on Monday in the PM session that gets raided. This low as well gets raided. And then we have this low being formed on Tuesday. So Tuesday, you can expect Tuesday to typically form the low of the week. So as a smart money trader, if you see a low like this being formed on Tuesday, especially during the London kill zone, you can anticipate it being as the low of the week going into Wednesday. But if you don't see a lower low being formed, if you are bullish, if you don't see a lower low being formed, then you know Wednesday definitely will form a lower low. So in this week's candle, the low is formed on Wednesday. The low of the week is formed on Wednesday. So as you can see, we just take out this rejection block. This rejection block, you can see price findings up finding support there, right there at the rejection block. Um, so we can see this week the low of the week was being formed on Wednesday London session at 2 a.m. during the London kill zone. That's when the low of the week was formed. That is typical. It's not surprising. It's not new. It's something that you can study going forward. So I just want to draw attention to this fair value gap. You can see this fair value gap. Price once is trading above it, it is supporting price. Once price trades below it, it only closed once, and then the next candle found support, opened, found support at the rejection block, and closed back into the fair value gap. So once you see a close above the consequent encouragement there, that's an indication that we're bullish, right? If we're in a buy program, so we can see price coming back and then finding support once more at the consequent encouragement. So yeah, that's beautiful. Forming the swing low at the consequent encouragement and using the 75 level. So after that price runs away, we a swing higher got taken. That's a market structure shift. Fair value gap. Fair value gap there, you can buy that. Another fair value gap there inside the order block. You can buy that if you want. If you want to trade order blocks. What time is that happening? On time. It's happening at 8 a.m. So I think this is during the 8:30 candle, the 8:30. So just before 8:30, we trade to this order block. Smart money enters. 8:30 candle runs away. Relatively equal highs here. You can see all these highs, relatively equal highs that price was leaving. So on Monday, Tuesday, before the Wednesday's trading, we had relatively equal highs there. They buy up just below the opening price. So all these are relatively equal highs. That's buy side liquidity. So easy smart money target. Equal high. All those are relatively equal highs. So price rams through the relatively equal highs. There's a fair value gap here. We come back and rebalance the fair value gap. So it's not retest, it's rebalance the fair value gap. If you can put a microscope on that, you can see price finding support at the 75 level. So it's still leaving the last quadrant. So this first quadrant, 1, 2, 3, 4, that is being left open in terms of bodies. Only the wick straight with that. So that is a signature in price. That's not money. That algorithm is bullish. It's in a buy program. So it prices higher, leaves a fair value gap here. We're finding support in the fair value gap, right? So as you can see, even currently we're finding support. We're even finding some support at Monday's opening price. So remember, it was a resistance below here. Now the opening price is support. Obviously, if it closes, in terms of closing, if it closes below, then it will use it as resistance. So it's dynamic support and resistance, unlike retail logic, which is fixed, static, support and resistance, which is deadly. So this week, as a discount week, so now right now I'm looking at the current price. So I'm just going to quickly conclude now. So this week, as a discount week, you're looking at the consequent encouragement level to see if you have a reaction there. We have a swing low formed in the London session. So going into the New York trading, I want to see if they leave this swing low open as the potential low of the day, right? So as the potential low of the day, I want to see if they leave this swing low open. But if they take it to come rebalance to this, that's completely fine. We have this all fair value gap here. We're gonna see if price revisits that, but I don't think so. Okay, so guys, thank you for tuning in. If you like this, please like and subscribe. This gap, this one here, I think it is this gap denoted on a, I think 4 hour. That's the last thing that I'm gonna talk about. So this gap here, the difference between the opening price of this candle and then the opening price of the next candle, it opened here, so that's a gap. The difference between the opening price of this candle and the closing price of the next candle, that's a gap in price. We're still finding resistance at the gap. So as you can see, in terms of bodies, none of the bodies have closed inside any of the quadrants. So if I put quadrants, none of bodies are inside the quadrants. So that's a significant price that is still acting as some sort of resistance. Thank you. Please like and subscribe.